In the wake of the stunning Wrigley bid yesterday, I'm asking myself whether the whole packaged food group has become too darn cheap. Wrigley is going out north of 30 times earnings. That's like Google. It was trading at 27 times earnings just going in before the Mars company made its bid. Tonight I want to figure out what this means for the rest of the group and what it means for food in general. So first we're going to take a look at the cheapest of the packaged food companies that I follow. And the company is named ConAgra. Now, you do not know it. I know you don't know ConAgra. Drives me crazy. What you do know is something like a Peter Pan peanut butter. You might know an Egg Beaters. You might know Banquet Foods. How about Healthy Choice frozen dinners? You might know that. My personal favorite, of course, Slim Jims. Yet this company is a dominant player in your supermarket. It's also got a really red-hot food ingredients business where it sells frozen potato products like fries, flours, vegetables, spices to restaurants. That's really strong. ConAgra is selling its commodities trading business for what is a windfall, $2.1 billion. It will make it more of a pure food play. This is probably the right move long run, although, of course, commodity trading has been red hot. And in light of the Wrigley bid, it looks better short term, but the commodities business has been a solid source of profits for this company, as well as a bugaboo to its own costs of goods. Now, I'm trying to. It's been a trying time for this company, okay? And I got to tell you something. Food prices, the raw ingredients have become so high last quarter that, well, the commodities trading business grew sales at 92% versus 21% for the whole company, but selling it was a good short-term move because you're selling it at a high. Now, let's fall on our source here. I recommended ConAgra before October 26th of 2006, March 28th of 2007. We're down. We're down badly. We're down 10% and 6% respectively. Why hasn't this worked? We like ConAgra because it was a turnaround story. We thought it could increase profits by saving on costs. But input cost inflation, Wall Street gibberish for higher food prices, threw a monkey wrench into that plan. Now, ConAgra is trying to pass on some of the cost increases to consumers. Recently raised prices by 5% across its entire consumer food business. But I don't know if that's enough to keep up with its rising costs. But then again, ConAgra is trading at a mere 14.5 times earnings. Looks very cheap, especially in light of that Wrigley bid. I mean, it could catch up to its peers after it finishes the sale of its commodities trading business. But I'm not entirely sure which way this stock will go, given the fact that I got it so wrong earlier. The Wrigley bid makes me more optimistic, but we never recommend stocks on takeovers here. We recommend stocks on fundies. We need to do more homework. So I need the perfect tutor. I need ConAgra's president and CEO and a man I backed when he came in, and I'm still backing, Gary Rodkin. He knows the business like the back of his hand. Mr. Rodkin, welcome to Mad Money.
Thank you, Jim. It's good to be here.
Now, I have read your there's a lot of great notes about what your company's doing, and I know behind you, you have got your hottest product, Healthy Choice Cafe Steamers. I've got them here, too. I got my second favorite general after General Sherman, General Cho. He's got very good product. I know that Mary Calendar is very strong. I also know that you've made some great turns in peanut butter. The Hunt's Diced Tomatoes is very strong. Egg Beaters. So why are we stuck here with a $23 stock?
Well, Jim, that's really better for you and the investment community to answer. We really are very, very optimistic about our business because we believe we have the right formula to really deliver sustainable, profitable growth, starting with a great portfolio of businesses and brands, some of them which you've named, a very, very robust innovation pipeline, a good runway of cost savings on the supply chain side, as well as cost containment on our SG&A. So we are very confident in the algorithm that we've put forward.
All right, I never ask executives about their stock price. The only reason I did that is because you sold that commodities trading business because you wanted to be able to become more of a pure play. I thought the stock would spike when it did. It's never the CEO's business to ask about this, to answer my stock questions, but I was surprised when you became more of a pure play that people didn't care because the big rap against you was the up and down nature of commodities trading. Now you've gotten rid of that up and down nature, right?
Well, Jim, we still need to close that deal, right, and I'm confident that that will happen in the not too distant future. and we will become a pure food play, and we're very, very confident that we will prove to our investors that we can deliver that sustainable, profitable growth.
Now,
and
on the conference call, you answered a question about a possible accelerated share repurchase. Are you able to talk about whether some of those proceeds could go directly to the shareholders, or would it be better to put more money behind the hot brands that you have?
Well, Jim, we will use those proceeds from the deal, and that will enable us to basically have an equivalent earnings stream from a normalized trading operations. Clearly, we will look for opportunities where we can get the best return on our investment, and if that means to accelerate innovation, for instance, we will do that.
Gary, when you came in, I knew you were a great brand man. I knew you were going to make big moves like you have, but I did not think, and I know you didn't think, that you would have $130 million in headwinds made up of increased raw food costs. Yesterday, a bold and brave man, Richard Bond from Tyson, came out and said that this is going to get much worse if the country continues down this path of diverting corn to ethanol, that it's using 30% of the expected world's crop, and he expects that it's going to hurt the regular people out there. How much is ethanol behind your increase in raw costs?
Well, Jim, I think it's one of three basic structural components that make this input cost inflation on commodities so different. Usually, historically, they've been relatively event-driven, and they come back to normal. But now we've got global demand surging from emerging markets. We've got a weak dollar, meaning folks from overseas coming over and buying our commodities fairly cheaply. And third, we've got our energy policy, as you stated, that really makes a trade-off of fuel for food.
Well, I'm trying to get my arms around how you can do the high man, the Bear Stearns earning of $1.59, if we continue, and you've been dealing with these headwinds, but if we continue to have the headwinds, if things continue to go up, won't all the work you do, your fine branding, the big increases you have in Healthy Choice and Hebrew National and Diced Tomatoes and Swiss Miss and Peter Pan, won't they go for naught?
Well, actually, we really do believe that we can manage our way through this, and that's why we're very confident in the algorithm that we've laid out that says that we can earn 8 to 10% on a sustained basis, including next year. And the reason we feel that way is because we've got very strong portfolio of brands where we can put high-impact marketing and selling programs, sustained innovation, and importantly, cost containment on our supply chain and our SG&A side. So when you put that together with the net pricing that we have just taken, which is very significant and across almost our entire consumer portfolio, and as we look proactively out ahead with an eye toward needing to make sure that the net pricing helps cover, you put the net pricing and the cost containment together, and we really can overcome that.
All right, one last question, Gary. I would think that given the craziness in the ag community, that there wouldn't be anything more lucrative than trading commodities. Do you feel, are you calling a top in the commodity trading business by your sale of your commodity trading business?
Jim, I can't tell you that we have a perfect crystal ball, but we do believe we sold on the way up, and it will be a very good business in a more focused environment as we look forward. But for ourselves, the volatility and the use of cash in that business made it a very good strategic move, and we're very happy and hope to get that deal closed very shortly.
All right. Thank you, Gary Rodkin, President and CEO of ConAgra. Good to have you on the show.
Thank you, Jim. Good to be here.
Food business is a tough business. This stock is cheap and priced as if you're going to keep seeing ethanol taking the costs up. If you think that we are at a peak in the price of food, you buy ConAgra. If you don't, you can't pull the trigger.